Hello, and welcome to today's episode of Mortgage Monday. On today's episode, I would like to go over something that we call PMI, or private mortgage insurance. You may be asking yourself, what is PMI and why do I have to have it? The overall answer to both of those questions is private mortgage insurance is an insurance that you carry monthly that's actually included in your total monthly mortgage payment, and that amount pays for that insurance in case you foreclose. If you foreclose, that money does have to be paid back to your lender. So that is the point of that insurance is if you foreclose, they will pay that amount for you. It's really just to protect your lender. Now, you may be asking yourself, how do I get out of private mortgage insurance? If you want to get out of private mortgage insurance, you can put 20% down on your conventional loan. If you put 20% down, then it automatically forgoes you having that private mortgage insurance. If you put anything less than 20% down on your conventional loan, you will in fact have to have private mortgage insurance unless you choose to buy it out. Now, that buyout amount is different. It depends on how much you put down, your credit score, and multiple factors. And that's something that you can actually go in depth about with your loan officer. So if you have more questions about that, reach out to your loan officer and they would be happy to help. It's what we call single premium payment. If you have any questions about PMI at all, please feel free to reach out to me and I will be happy to assist you in any way. My contact information is below and I will answer in any way at any time.